Don, aka Doughboy Vlog, back with another video. Today, I'm just going to be going over trend lines and showing kind of why they're effective to use and why does it keep your trading so simple and effective. Um, a lot of people like to use indicators like RSI, EMAs, and all type of stuff, right? I only use one indicator, and I don't honestly even use it to like take trades all the time. Like it's just to look for divergence, but that's in another video. But like I said, with trend lines, right? Trend lines help us identify which direction the market is going. Some of us traders that's been doing this for a while, we can identify an uptrend or downtrend pretty easy. But it does help to actually place trades that respect your trend lines as well. So without rambling on about it, I'm gonna kind of show you guys how we draw trend lines. So I'm on GU right now, right, which is pound USD. Looking at the most current area of pound USD, it's been in a current uptrend. If we go back and look at this whole trend, right, literally from the 3rd of September when the price made its final low, it's been going up. So obviously, like I said, that's an uptrend. That's easy to identify. But as far as drawing it up, um, you want to go to the second icon down. If you click the little arrow right beside that icon, it'll give you a bunch of tools. The two tools that I do use are trend lines and rays. A lot of times I like to use the trend line more than the ray. The ray will give you a straight line, which the trend will too, but it's just with the ray, right? It's gonna keep going. If it makes sense, like let me show you. It just keeps going. So no matter how far I zoom out, this thing's gonna keep going. So that's why I don't tend to use rays a lot. I use more so just the actual trend line itself. But we want to find the lowest point because, like I said, we are drawing an uptrend, and then just draw up. Now, I do color coordinate my trend lines. Now, being that I'm on a daily, I like to do my dailies purple. So that way, anytime price does get to that area, I do know that that is a daily trend line, right? Now, to confirm that this is a valid trend line, most trend lines just need 2 to 3 hits off that trend to confirm that this is a solid uptrend. Now, looking at GU, right, we got obviously the first hit here where price starts that trend. But then if we, keep going, working our way up, you got another hit here, right? And then we got one more at the top, which is super relevant, right? Because this is where price is currently at, right? This candle right here, if I put my crosshairs right above it, and when we look down at the bottom, you see it says '05 February 20. That is today. And if we pay attention, like I told, I don't think I said it in my last video, but your higher time frames have authority over lower time frames. So if you see something on a higher time frame happening, just know it's gonna happen on a lower time frame. But paying attention to this, being on the daily, you can see like these wicks kind of go down, touch it, and then they draw back, right? That means that this trend to me is a very, very valid trend, right? And then it's just working your way down. So we obviously know that GU's been on the current uptrend. So next we want to do is work our way down, go to the 4 hour, right? And then draw a trend lines on 4 hours. So we know where price is currently at. So if we pay attention, this is that second hit right here, and price had an impulsive move, and then it came back down. Now, what you want to do is for a situation like this, because it looked like GU was just moving sideways, but in reality, it's not just moving sideways, which I'm about to show you here in a second, right? But it looks like it's moving sideways. So what you want to do, right, is look for that impulsive move, this was that impulsive move, right? Had one hit, two hits, impulsive move. Price was settling out. Once it actually settled, it made its low because this isn't lower than this. So this is the actual low. So if I was to start drawing my trend lines for my 4 hour, it's the same thing. Grab a trend line tool. This time we're going to change the color from purple to orange. So every time price gets to a orange trend line, I know that this is a 4 hour trend line. And I'm going to start at the bottom of this low and then draw this trend up. Now, I always tell my students this because I do mentor and coach. Make your trends or your anytime you draw trend lines, support and resistance, draw those to where they're comfortable and they work for you. Right now, you just don't want to make them sloppy or force it. And what I mean by that is like if you see like right here, we kind of have where price comes down. And this is what I mean by forcing it, right? Some people will take their trend lines, right, and try to draw them. Delete this one real quick. Some people will take their trend lines and they would try to force it to where price is at, right? Like here. And in situations like that, I feel like that's kind of how you mess up your trading a little bit because, you're not just going, put it to somewhere where you're comfortable. Like, hey, I like this area. And I'm going to show you why I like this area. Put it right here, back where it was. And the same thing before, like on the daily, right? Where price started is low, right? Boom. We have the low. Got a near miss here. And what I mean by near miss is when price actually gets close to that trend line but doesn't actually touch it. Got another near miss here. So like I said, you only need 2 to 3 hits. So that's already 3 right there. So at that point, I know price is still technically going up, right? Got another, I'll just consider this 1. Another near miss here. Another near miss here. Another near miss here. You got 2 more here. And the last part of this is real key, right? Zoom in. See price came down, right? Rejection, rejection, rejection. Remember, on a higher time frame, so this has more relevance than the lower time frames. But you see rejection, rejection, rejection. Price pushes out. It extended all the way down, hit our daily, came back up above our 4-hour closed, and then they did the same thing again, but pushed down to the daily, pushed back above the 4-hour, and closed one more time. So, which is also considered 2 more hits. So if you look at this, this is how I say this is a valid uptrend because we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 more hits to this 4-hour trend, right? That's a valid uptrend. So the best way to trade that situation is anytime price would have came down to that 4-hour trend line, just look for price to go long, right? And let's see. Let's say that you were just basing your trading off of price getting to this trend line or getting close to this trend line, right? And you was looking to buy every time. Look how many times you probably would have been right? This situation right here, price came down. Well, the first time that it made this hit to the trend line, right? And then it went up over 100 pips, right? Price came back down, near miss. But if you say, hey, it's close enough to my trend line, I want to take that trade as a buy, about 80, I say about 90 pips, right? That second hit, same thing. Price extended, right? It actually gave you a wick. And I always tell my students, if you see stuff like this on higher time frames, this is showing you, hey, it's more relevance. And if you know market structure, right? Even though we're going over trend lines and I spot this, but this is market structure. You got a double bottom right off that trend line. More elements to trading gives you more tools to use, right? But same thing here. Another 100 pips. And you can see how effective just using trend lines are. You don't even have to do a lot. This situation here, price came back down, formed another double bottom, right? I'm going long. 355 pips. Now, we're not going to say you're going to hold that thing for the whole entire time, but you can kind of see how it works. And if you're basing it off a higher time frame, just always keep in mind, right, that when you're basing something off a higher time frame, it's going to take a little while for that trade to play out. Right here, another situation. You could have bought 143 pips. Here again, price came down, near miss, extended wick, 170 pips. Right here. And this is why I say have a trading plan, right? Because let's say right here, price tests your trend line. You say, hey, boom, I'm getting in. That's 50 pips. My 1-for-1 is 33 pips. I risked 33 to make 33 pips. I would have closed out on this trade afterwards, right? If I'd have seen that price wasn't giving me no more bullish momentum, close it out. Take what the market gives you and live to trade another day. Price came back down, right? And let's see. Even though I didn't consider this, some people probably would have, right? But it's the same thing. If you have a risk to reward plan, you could have won that. In my situation, I would have won that 36 pips, right? I'm only looking for 33. But then right here, price came back down, touched that trend line one more time, gave you a big wick. I'm talking about this is the epitome of a what I want to call it, a buying candle, right? Because price was going down. If you look at this wick, this was all seller candle at one point, and then it just pushed out, closed out like a little lollipop, and then big bullish candle. So if you'd have seen this wick out on the 4-hour, you'd have took your entry. That first candle would have brought you back 100-something pips. This whole move went about 220. I actually had called this trade, I think last week. But yeah, that's literally why trend lines are so effective, right? Simple but yet effective. And those are examples of uptrends. So let's find an example of a downtrend and do the same thing. Because I was analyzing these charts earlier and I found some good spots. So same thing before, daily chart, right? Take a trend line tool, find the highest point. If I look to the left, obviously this is the higher point than this one. So we start at the top, draw this thing down. And I'm going to show you guys what's going on here. Change this to purple. So I know this is my daily, right? And I know people are going to ask about this wick, but remember, it's a wick. Price just extended there. So that doesn't necessarily mean that price has to be off the top of that wick. In my eyes, remember, it's trader preference. If we go down to the 4-hour and we pay attention to this trend line, like I said, it's the same thing as before. You're just looking for a couple of hits to this trend. So this was the top part when price came back right here. If you was watching the market around this time period, you could have probably executed this trade. Why? Because look, this is a big exhaustion wick, meaning that the buyers was not pushing price above this level no more. We're on a 4-hour time frame, and this is a 70 pip wick, right? So if you'd have seen this on a 4-hour happen, right, price extended all the way up, which is more than likely news induced. But if you'd have seen price push this all the way up and you say, hey, this joint's sinking back down, and it came right back below your trend line, could have took the sell, right? And price kept sinking. Obviously, we done beat out 1-for-1, but you see what's going on here, right? 150 something pips. Guess what? Price comes back up to retest that trend line once again. If I'm using my risk to reward, my 1-for-1, right? Let me place this. Was that a long position I clicked? Short. If I place a short here, boom, right? Like I said, I'm only looking for 33 pips. Watch how easy this is. Stop level 330. It's 33. Profit 330. 33. Okay. Boom. Another trade won. We do this all day. And this is why I love trend lines. Like at first I wasn't really necessarily using them because I was basing my trades off a lot of other stuff. But you know, simplicity wins the game. Honestly, in my eyes, another winning situation, right? Because you're following the trend. You're following what the market is actually doing, right? You're being patient and waiting for the price to give you these setups. And if you know other elements like breaker structure and market structure, that makes it even more sweet. So, and it's the same thing before. Like I said, all you need for price to do is touch this trend line at least 2 to 3 times for it to be valid. So that's going to be considered one hit. The second, price touched it, extended, it just didn't close above that level. Delete this real quick. Delete that. And we got another hit here. Another hit here. And so forth, so on. Got, a couple more hits. But as you see, drawing trend lines and identifying them, they're pretty easy. And they're very, very effective when it comes down to using it in trading. Due to the fact that if you ever get into this game, you're always going to hear this term. Go with the trend. The trend is your friend, right? So if I know that this is a downtrend, like I said, I'm going to look for down setups. So if I drew, let's just say like an example like this, right? Everything like right here. Let's say all that's happened already, right? You mark this up. You know for a fact that this is in a downtrend because we got 4 hits off of this trend and price has yet to break it, right? All you got to do is play the patient game. The patience comes before the trades. Like when I first got into this game, I thought that the patience was once you put that trade in. No, that patient element has to come before the trade. Sometimes you have to wait 2, 3, 4, even a week. Sometimes, but 2, 3, 4 days up to a week, you might have to wait for a trade to play out, right? Because let's say you see this setup after this down move that happened. Some traders feel like they missed out. They're like, damn, dude, I'm not going to be able to get this trade. But if you pay attention, this is July 1st. How long does it take from this to get up here to this trend? About 4 days. So about 4 days, you would have waited out for price to see if it was going to get back to your trend line. And in this situation, which it did, right? Like I said, and if we're using my risk to reward plan, what I use is 33 pips. I'm not going to go into details of like the lot sizes I use. I only release that information to my students. But as far as, my 1-for-1, like what I'm willing to give up and what I'm willing to gain is 33 pips. So once again, if we take a short position, you say, hey, I want price to touch this trend line and then give me some type of signal that says, hey, I can take this sell, right? You see this big green candle right here. This orange candle form, it gave you a star. You said, all right, bet I'm getting in on that trade because it's a star pattern. Price is not extending no more above that level. Watch this. 330. Remember, the 0 is just the extra number. It's not, really 330, but it's 33. It's 33. Trade you would have won, right? Look at this. Zoom in on it real quick. You'd have took the entry here. Now, price would have played out for a couple of days. But eventually, you would have hit your TP right here before, price actually pulled back up to retest that trend line one more time, which would gave you another entry, right? Another solid entry. All you had to do was see this happen again and then, some more sales because, look, you're following the trend. You're just following the trend. But that's pretty much it on trend lines. Like I said, you can use them on all time frames. But just also keep in mind, like I said, the higher the time frame that you draw it on, the more relevant that trend line is. If you're day trading, I've always tell my students this. If you're day trading, you don't, like I said, we don't typically look to hold setups long anyway. That's why I have a 1-for-1 to 33 pips because I know the market typically gives you 30 to 60 points a day, right? 30 to 60 points, 30 to 60 pips a day. That's usually what the market is going to produce on most pairs, depending on what you're trading. But I know for a fact, if that's what the market is going to kick out, why not just make my 1-for-1 within that limit? It don't got to be as high because, pips are going to pay you, but lot size is what really pays you. Because you could still aim for these same 33 pips, but if I increase my lot size, obviously I'm going to make more money. So that's why my 1-for-1 is only 33. But a lot of the times following these setups, and I tell my students, and I even said this on my Instagram, I don't set TPs. Why? Because of a situation like we just looked at, right? Let me go back and find it real quick. And then I'm going to end this video once I find it. All right, I think, yeah, this is it right here. I think that's it. Yeah, that's it. Boom. Right? But if we draw this trend, right, this trend line back down, we're just going to use this arrow one more time. Right? And let's say, like I said, after that second or third hit off that trend, right, and you identify that, You're like, okay, yeah, this thing's in a downtrend, so I'm just gonna wait for it to get back there, right? This is well more than a 1-for-1, right? Now I'm gonna break this down to an hour time frame, and I'm gonna show you guys like how sweet and simple this shit is. Like I said, 2 hits confirmed, right? Price came up, pushed back down, came up, pushed back down. Hella extensions, right? Right, but no close, no breaking, no close, and we obviously know that based off the 4-hour time frame. Now, let me click something real quick so we can see this. Session breaks just kind of break up the days of the trading day, these lines. So this was what, the 29th, 30th. So this was a Sunday, Monday situation here, I think, on the 20th and 30th, or 29th or 30th of May. Let me go back and look real quick. No, so the 29th and the 30th of May, 2019, this was a Wednesday, Thursday, and then this was Thursday, Friday. So you still would have got the 1-for-1. I don't hold trades over the weekend no more because I blew an account like that before. It went negative. But if you took the trade here because you've seen that that's what price extended to, and it's playing off the highs of the past previous days. Excuse me, put array, right? Because this is the high. Let me delete this box real quick. Look at that. The high one day, the high the second day, and then this is the day that you're currently in. So if you know price is playing off the highs in your trends, like I said, it's just give you more confluence to take that trade. Keep trading simple, man. Don't make it hard. And a tip that I got from Q Banks, right? You always want to place your entries where the most wicks is. So if I took this same horizontal line and threw it down to where like all the wicks, let me touch this up a little bit, thin it out. All right, bet. You want all the wicks to touch this one line, and that could be your entry point, or majority of the wicks. I'm gonna say all of them, but majority of the wicks, right? So this wick touch it, these 2 wicks touch it, these, and all 3 of these. So if that was your entry point, we're talking about minimal drawdown, right? Minimal, not even probably 2 pips. If this was your entry off this red line, 3 pips. So 3 pips worth of drawdown. But as soon as this trade would have took off, you didn't get the 1-for-1, right? Not right off the bat, which is fine. But a good trader knows, hey, look, let me just take it. You know what I'm saying? Fuck it. I risked 33 pips technically, but it didn't even go that far back. So just take that out and keep it moving. This was, like I said, the 30th, and then the weekend happened, and you clearly see what happened after that. So, if you're a confident trader, you want to hold it out, you could. But, most people, I don't recommend, obviously, holding trades over the weekend. But clearly, if you did, this trade gave you well over a 1-for-1 situation. We're talking about 120-something pips. So this is the reason why, like I said, trend lines are effective. You should just use them in your trading. And make sure you just draw them up to where they're comfortable for you, and you're confident in what that line shows. But that'll be all. If you guys are interested in joining my Telegram group chat, just shoot me an email. My email is in the description box below, and I'll get you joined with my Telegram group and kind of help you guys out. Like I said, my goal is to mentor and coach anybody that needs help in trading. Because this is a pretty easy thing to do, but people overcomplicate trading, which makes it harder. But that is all for today. See you guys on the next video.